Good evening, everyone, and thank you again for joining our meeting of the Learn, Grow, and Invest group. I am opening for us tonight. My name is Chike Verway. For those who were here in the previous meeting, I am one of the admins for the group and also the resident analyst and value investor of the group. For those who are new, welcome. Thank you for taking the time out to be with us. And we definitely hope that what is given today in terms of the discussion will definitely be beneficial to everyone here. So as is customary, we do like to open the meetings in a word of prayer. But before we do that, we just give you a little bit of request in terms of joining the group. If you'd like to join the group and you're interested to keep up to date with what's going on with our group and our discussions, you can follow the Learn, Grow, Invest Club on YouTube. You can also follow us on Facebook or join and request to join the group on Facebook. And you can also follow us on Twitter. So as is customary, as I said, we're going to open with a word of prayer. And then I'm going to hand it over to the MC for the evening. Who will be doing it? Miss Lisa Marie Knight. All right, so here we go. A word of prayer. So, Father God, thank you for bringing us all here safely today again. Thank you for the protection that you've given us and our families in the midst of what is going on to be the pandemic that has ravaged the world. Thank you for, in the financial sense, sparing the country. In terms of all of the news that we've had, we've rallied so far. As we come to the close of 2020, we look forward expectantly to the new opportunities and the healing that will be given to not just Jamaica and all that were affected, but also the rest of the world. May the discussion that we have today with our guest speaker be fruitful to everyone, and new lessons or even old ways be reinforced and taken away from the discussions tonight. Carry us safely if we are traveling after this to our destinations. Protect us all and our families. In your precious name we pray. Amen. So with that, I'll hand it over to Lisa.
Thank you, Chike. With that introduction, I'm going to have to try and top that because the way you introduced me made it sound as if I was our guest speaker tonight. Good night, everybody. Thank you so much for coming. I have the pleasure, or Jeremy intends to give me the pleasure of introducing our speaker, mainly because he's my mentor and my boss. But he also is very notorious on Twitter for all of his financial comments. He has been in the business about 10 years. He is our vice president at GK Capital, and he always has a lot of good advice for a lot of persons. So if you were not at the last session that Ryan was at, we went on for a very long time. We were riveted. We were riveted. It is with great pleasure, with great honor, that I introduce to everybody Ryan Strachan.
Good evening. How's everybody doing? Thank you for having me. It's good to connect with you again. It's been how long, Lisa? Or a few months?
6 months. 6 months since the last one.
Really?
That's yes.
April?
No, Ryan, we're in December. That would be June.
Sorry.
Yeah, June. Yeah.
Mentally, I'm just I'm probably 2 months ahead. Anyway, yeah, sorry. Yeah, good to be here. Hope we can add some value tonight and we can talk and answer some questions and try to provide some clarity and stuff. And it's reason, grateful.
Well, before we jump into the questions, tell us what you've been up to.
Last 6 months?
Yeah, last 6 months.
Quite a bit. Where should I start? The top? All right. We won general elections September 3rd. So that was exciting. We were monitoring the markets, of course, and of course, I run a business line, so we made some money for the clients.
I like
But
how you put it, we made some money, like it's casual. Oh yeah, man, I made a
for the clients, and it's worked out. It's interesting because I remember when the whole pandemic started, I was like, Jono, when will we ever live through a time like this where you had the Dow falling like 10,000 points in a matter of weeks.
some weeks, yeah,
Yeah.
man. I remember.
Then you had lockdowns all over the world. You had people scared to leave their house. You had bars, gyms. You had bars, gyms, churches closed. You just had a stalling of economic activity. And, despite that, you had Jamaica Stock Exchange falling. And then you had, people like me not getting a lot of calls, but people inquiring, like, what should we be doing? And trying to keep a cool head and all of that. So we made clients money because, we're able to buy some securities at discounted values, but it meant it meant really practicing what you preach, as an advisor and a stockbroker. It meant having an eye for opportunities, and it literally meant buying when others were selling and being aggressive when others were fearful. And I mean, it worked out. I really can't complain about that. Even in the midst of that, as you would know, we're closing new business and still growing. In fact, I can say in my division we're ahead of last year, which is a blessing. And that's with a pandemic. And I was going crazy, but still here by the grace of God. So that's what I've been up to.
Okay, and you have some time off ahead of you.
Yeah, actually, I go off. I think I know for sure I'm off the last 2 weeks. I'm trying to get Thursday and Friday off. If it's approved, it should be fine. So I'll be off for 14, 18 days. That's my
Okay.
break. I haven't had a break really since September last year because I'd done all this traveling and then I exhausted all my leave before. So even if I was off for a day or two, it wasn't real rest. And then, presidency and elections and work and business, whatever.
So for those who don't know, Ryan is the president of the youth sector for the JLP.
Young professional. But
So he is very busy, very, very busy. But
so, yeah,
let's get into the meat of the matter, Ryan.
let's talk
What is your market economic outlook?
right now.
I'm going to ask you because you already told us what you had expected of 2020 at the beginning of the year. So what do you see as it stands right now?
For 2021,
Yeah.
I think that, well, I have to break it down locally and then globally. So I'll start locally.
Okay.
I can say things getting a little bit tighter. I think
Tighter how?
locally,
Mm-hmm.
also
Meaning,
I think you're gonna see some compression in asset prices to an extent because Christmas has been more or less curtailed, and a lot of people or industries actually earn all the money at Christmas time. So you're gonna see that carry over because remember, so like retail is back to school is a big window. Then you have Christmas. So you may have the Christmas shopping condensed, so they should be fine. But when you have sectors like entertainment with no permits for events and limited gatherings and even like hosting of events, banquet halls,
mm-hmm.
etc., would have their own challenges. Event planners, wedding planners to a lesser extent,
And
etc.
then, of course, tourism for persons who normally come home for the Christmas season. Okay.
Definitely. So I think those factors are going to impact us locally to some extent. What it looks like, I'm not sure, but I'm pretty confident that by the end of June, we would have bottomed out and it would just be a straight recovery after that. When exactly we bottom out, I'm not sure because I think we'll get an idea of who was able to survive the lack of Christmas activity. So we'll see some of that. Though I admit we have a large underground economy and people will pivot. So to pin it down precisely may be difficult. But I'm pretty sure we'll see some challenges. But the debt levels, because there's this transmission gap, it just takes too long for us to get information. I'm not able to like know for sure what like household debt levels are like now relative to a year ago. Whereas it will take us probably maybe there's a 3 month time lag behind that, whereas the US is probably 2 weeks from the end of a quarter to get particular metrics. So we may have a hard time figuring that out. What I can tell you though, anecdotally, I am seeing a lot of real estate come to market, and I figure that more will come to market. Whether affordability is another question, but there are
That was going to be my question. So real
yeah,
estate
yeah,
coming to market is great, but what about the affordability? I don't see the prices going down. The prices are not, and I'm not talking commercial. I'm talking residential. The prices are not going down.
no, and it's you may have people willing to accept, reasonable offers, but I don't see there being a big drop. But let's see. As I said, I think the picture will be clear by March.
Okay.
And then the vaccines will start to find its way in the system around April. So we should be seeing some resilience where that's concerned and COVID. I think globally we are already starting to see a bit of a rebound, both in the markets and in the economic statistics. Granted, that's against the backdrop of there being no international travel. And, I mean, international travel fell 96% in the US. So that alone will tell you just how bad things are in that space. And that, of course, has implications for like oil prices, tourism businesses, which is why I think it was good Airbnb went public. No, because I think they're taking advantage of that. And I think we could see some softening. But I think with the vaccination underway now, and I think it's been said that there'll be about like 800,000 persons vaccinated in the next few weeks, and start
Mm-hmm.
in England. I think we will see the wheels start to turn a bit. My caveat though in both spheres is to what extent has there been permanent damage in the economies of the world? Meaning, it's one thing if you have a store that had a bad 3 months or 6 months and you're still able to pay your staff. It's another thing if the struggles cause your business to close because we already started to see businesses file for like bankruptcy. I don't remember the names right now. There are two retail giants that had particular challenges. And as such, that's my only thing I'm watching right now to see what permanent damage remains and then what's just transient, what could be recovered from relatively quickly. So an example, I don't people talk about like oil demand, well, oil prices going up. I wouldn't bet on that at all because I don't see where the demand is gonna come from. So until that's clear, I would be betting on a muted 2021. I could see some rebounds of sorts in 2022. Meaningful one, but for the time being, economies are going to be at like 85 to 90% of capacity, definitely for the next year.
So the U.S. economy you're expecting to pretty much to have the same outlook, where it's going to take some time for them to rebuild.
Yeah.
Going to take some time for them to come back up, especially with, I know airlines are trying, but I don't think they're going to come back up with much strength and travel. But we'll see how the vaccines work out 2021.
Yeah, and there's something else I should add that I think in the worst thing that has happened recently is this talk of community spread. This is coming back to local, this talk of community spread in Westmoreland because you already had the advisory for Jamaica issued by the US, which is kind of counterintuitive, but I won't go there. But when COVID first came to Jamaica, the only saving grace I think was that it hit us in March and not December because of winter tourist season.
Mm-hmm.
Unfortunately, with this talk of community spread, you may have people thinking twice about going to Negril to vacation or going to Mobile to vacation. I mean, I was coming from Mobile then, and I wasn't seeing the kind of hustle and bustle that you normally see this time of year. Granted, I did not go in the main hotel strip. I mean, I was at, I was at the S, but one or two guests there, but it wasn't bustling. The strip never had that many people on it, etc., etc. So that's kind of something to watch. Let's see what January, the end of January looks like. So if it's really bad, I think you could start to really see the ripple effects, particularly out west, from as soon as February. Because you can't afford to lose a winter tour season. But it's day by day, so let's see what happens.
So what are the trends you're expecting?
Yeah.
What have you been? What are the trends you've been observing, and what are you expecting? So, like from banks and major corporations, and even your regular retailers, what trends have you been noticing? Because I mean, COVID started in China last year. It hit US hard earlier this year. So we're now in survival mode, trying to live with it.
Yeah.
So now we're now trying to develop our own trends. What have you noticed?
Locally, right?
Yeah, locally.
All right. So when I go around the place, and it's not this is not a a complete observation. So it's just what I've observed. I may have missed a lot. I am seeing like retail space and well. I know when schools were closed, a lot of the back to school guys were having their challenges. At the same time, I know of 2 or 3 jewelry stores that just as a result, or just appliance retailers, as a result of selling like sanitizers and sanitization stations and whatever, were saying that COVID actually gave them a new business line, right? Selling thermometers and what's the word, hand sanitizers, blah 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 blah. So I'm seeing some measure of pivoting. I don't see as many ads for sanitizing companies on TV anymore. But I think generally I'm seeing that 80% cap on the output that was there before. Now, if we look at, obviously we know entertainment has had challenges. But again, there's the pivot, because so when I go to, we go to a bar or whatever, they'll say they just fit all the business into a tighter window. In other words, or you have a bar, say, instead of it being a Friday, Saturday, Thursday, Friday, Saturday thing, they have crowds literally, or not crowds, they have patrons every day of the week. Right? Because so many people went through withdrawal in April and May, that now they say, well, just to get out and have some fresh air. Now you hear, I read an article, I haven't even read the papers fully yet, but you see where liquor companies were saying that with sales rebounding, people should drink responsibly. So it tells you that there are things happening. And Jamaica is a very hard economy to read because we have so many hustlers. We have so many hustlers beneath the surface. Like, it's really difficult to capture the amount of activity we're seeing. Now, when you look at the larger businesses like Grace Kennedy, etc., their revenues are still ahead of last year. I can't say with Cinco. I don't know with Cinco offhand, but I know for sure Grace is somewhere ahead of 2019. Definitely profitability-wise, and they're gonna most likely, my guess, because I'm not really in that side of business. My guess is Q4 2020 will be great also. Lasco, etc., etc. So, and I think it comes down to how our economy is structured, because we don't manufacture as much and we import finished products for the most part. For trade, you can trade reasonably comfortably if it's buy and sell, unless of course the source of demand shifts, like the school uniforms, etc. But then if you're selling like tablets for students, etc. And they're staying home, and then you have businesses buying 100 tablets to give away. Then that in and of itself is turnover. So because I have a trading environment, I think the capacity to pivot is a little greater. Unlike if we were making, imagine this. So you have a luxury car business selling. You see that sales down 35% this year, right? That's sales on the finished product side. But then think about it. Suppose they were making the tires locally. Suppose they're making the axles and the body. Then you think the impact would be spread a lot further rather than just the end. No, one could say, okay, all of this revenue we're not getting through the value chain, which is true. But then that may soften the blow, I suppose, in a time like no, which probably may not happen again for another 50 years, I hope. But at the same time, it means that so what's required to recover, I think, is probably a little less than were we like a Detroit that was heavily industrialized, etc.
Okay. So, in all of this market trend observation and all of this investing, because you say you made some money for your clients this year,
Yeah.
right? We have a lot of persons who are new to investing, who are just trying to figure it out, and they're not so savvy with either one of the markets. So what are your personal asset allocation strategies based on economic trends, based on what's happened in the market, based on what's happened in the economy? How did you pivot to, because I've gotten a lot of calls that have said, okay, my portfolio is down. All I'm seeing is red. What do I do? How do I stop this? I'm losing money. I don't want it to go down to zero. So what have you done this year?
Well, for myself, I didn't really do much. I bought Grace Kennedy. I took advantage of a debt opportunity to lend some money to a stable business person at an above market rate. So I had sold some of a conservative position I held to facilitate that. I mean, I took advantage. I probably would have seen it in an email where I had said, you have businesses that are doing well now, but they're not traditional, so they can't raise, they have to give like their house to a bank for collateral, but they're generating above average dollars every month. So they be considered subprime in a typical sense, which is something I actually want to speak to. Right. So yeah, so they be considered subprime because their asset base is not 2 houses and 4 tractors and a building, etc. Or where, right? But then they generate revenue through the provision of a service, but the cash would help them to offer more of the service. So I took advantage of the opportunity, and it was a tidy opportunity, and it was more than it was like 3 years interest in like 6 months, pretty much at an above market rate. So one of the things, but that means the trend is therefore the risk on, meaning one has to be willing to take more risk. No, because that's the only way you'll be able to generate above average. Well, to be able to generate a return on investment, because people may say, oh, well, all right, I'm going to be really conservative. So let's look at it. The treasury rate now is probably, I don't know, I mean, one of you guys can tell me, 1% for 10 years.
1.12.
If that much, right? I mean, you put $1 million or whatever currency, you're not making money, right? Whereas you take on some risk, which is educated, you could make that in a week. But it comes with comfort and understanding of the space. So I'll give you an example. In around when the pandemic hit, everything fell, right? So for me to understand what's going on, I looked and I said, okay, economic activity is constrained, right? What is fundamental to people's existence? Food. Globally, maybe there weren't as many opportunities. Locally, we looked at Glasgow manufacturing, though I've had the position for a while. We looked at Grace Kennedy, and Grace Kennedy's margins really improved the last two quarters. Price was moving 51, 52, 53. I said Grace is a buy, right? Jamaica Brothers, less so because of the hotels shutting or whatever. They may have their own challenges, though it seems a lot of those are behind them now. And there's no chicken shortage for Christmas because we're going to eat food, right? So locally, we pivoted in that way. But then no, there's two other things, and I really want to remember. So I'm just writing. But one is so overseas. Hold on. So I said on Twitter that at the time you had logistics being a big play and the need to communicate with clients remotely being another one. So at the time, at like $1.40, $1.30, mail pack was a pick that we had put forward as being worthy of consideration, particularly for the persons with cash, because while I'm not 100% sure of the upside in terms of past like $3, the $1.30, even if you're talking $3, you're talking 110, 120%, and it could get there very quickly. That's an example. Another one was the lab, who I think reports results before the end of the year. I mean, there's no secret that it's a stock I've held for a while, but I thought that businesses would want to communicate with their clients because you can't go into an establishment, but you can watch TV, you'll be on your phone, you'll be online, whatever, whatever. So we said, well, that's an opportunity where possible. Now, overseas, now, one of the things I did specifically was, and this should have been around, when did we buy all the Apple and Facebook? You remember?
August. About.
Whenever it was, I did something I don't normally do. Having gone to some cash or some portfolios, I said, we are going to over concentrate in tech. And Apple, Google, Microsoft, Facebook.
Yeah, but that worked out, didn't it?
Well, that's the point. And then because the premise was that was because we said that people would need to use these services remotely. And the market for that would be really aggressive. Of course, it helps that we're in the trading business, but the point is, we're buying these big. I mean, I remember we bought Apple for one client that's, I don't know, like couldn't be like the equivalent of $50, I think. It was sold at 130. It's not with small money, and this was in no time. And Facebook, we just started selling. We sold up Facebook today because of well, a little before because of the antitrust lawsuit, which I knew was coming and have been publicly disclosed. So we're just waiting to see if there'll be a major fall. Point, however, is that the typical CFA would say, oh, well, over concentration is bad, which it is. But the fact of the matter is, somebody buying into oil, etc. No, we're going to have to wait 4 years to see a recovery. And then the question is going to be, will the world be accommodating fossil fuels at that rate at that time? So would that be a good investment for the average person? Would you be doing right by your client if you bought into oil? So
yeah, but if you go into your over concentration, right? If you go into your text in August, it can be a short-term position. You don't have to be in it for the long haul.
Yeah,
it just depends on what what your economy is looking like. So you'd make a decision, or do you tell your clients to hold?
No, man. I mean, we exited most of. I think we sold everything. We had what? Apple, Google, Microsoft, Facebook. Yeah, I think we sold all of it. We sold Google last month. I mean, we're buying Google at 14 something. We're selling at 18 something within months. 17 high, 18 something in months. So, and again, they're going to have their own antitrust challenges. So, I wasn't really bothered by that at all. I mean, but it's real life. It's a lot of money we're talking about. But the concentration was directly in response to what we're seeing in the world now, and there being limited spaces that I felt comfortable in. So, I've been saying I bought Dropbox recently and some others because I think Dropbox is an acquisition target. I don't know who's going to buy it, but we believe there's upside. So all in all, the trend is towards taking on risk for the accumulation of outsized gains, which is why now we start to see NCB doing this alternative investment fund or however they describe it. Because if you are going run of the mill now, there isn't really much return in play for you. In fact, I mean, banks now interest rates are static because remember you have a softening of the the consumer's ability to to pay the debt, to service the debt. So increasing interest rates is going to have impacts on default rates. It's going to have impact on your non-performing loans, your provision for credit losses, blah 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 blah. So then now they have to be looking for new spaces to generate increased interest income. Where is that going to come from? So now you may see them trying to get in the signals lane and going after like factoring, which is borrowing or lending with receivables as your collateral, or they may try to launch like their spin-off businesses to drive income that way, or increase return on investment that way. Because remember, the banks still have a cost of capital because they have to pay interest rates or savings rates. Granted, it's not a lot. So they're now looking for new things, and everybody is uncomfortable now. Tourism and hotels are viewed as higher risk, so they have to give up more collateral to access capital from or financing. So then, will they need private equity funding? Will they need venture capital funding? Will hotels get smaller? Because remember, you know the business. I mean, if you have this 500-room hotel, you can't just pack up tomorrow. It's not like it was built cash more often than that. So you need people in there.
Everybody has to pivot. I saw Pegasus did they started turning their rooms into co-working spaces to try and generate some kind of income. Everybody trying to pivot.
You have to. You have to. Because now what this has done, it has disturbed the whole equilibrium in the middle. So the guys with money in hand already will be okay, more or less, because once there's no collapse of the financial system, which it doesn't seem like it's gonna happen. That's one side. In the middle now, where people are generating income to pay staff, whatever, that's now where you're gonna start to see a lot of moving pieces. So I saw a video the other day, and it was at the Pegasus of a function about a year ago. And I thought about it and I said, all right, everybody who's there probably either like, guys and girls would have bought the outfit they're wearing that night, right? Then when I saw like all the wait staff, etc., those guys would have been working then, but they're probably not doing that work now. So what the hell is that person doing now? You know? And then how does that now filter through the economy if you multiply that by 50? Because remember, now it's what, December 9th? Literally every night from like December 1st, you have a party or 4 parties. So, which is why now you have the artists still going overseas and breaking curfew, breaking quarantine. We're not really allowed it up still because they have to make money. They have to make money. So it's like, it's just everything is scattered and everything is so transient and nothing is set right now. It's just all these moving parts. That's the trend.
All right. So if you have the average investor, you have someone who is not used to watching trends. They go in the newspaper, they go online, they look at a company, but they don't really understand the correlation between an individual company like a mail pack and the industry. what tips would you have for the average retail investor to understand market trends?
That's a really wide, especially in Jamaica. We don't do the best job of retaining and sharing information. So you may have to read 3 times as widely to get information you can actually form an educated opinion on. It may mean you have to go to the AGMs and listen to literally everything that the reporter did not capture, or you have to go watch the recording. Because what I found is that many times you have the speaker will say 10 things. You may have a reporter that's not financially literate, so the salient points are lost on them, and as a result of that, you don't get the information that you need. It's not like you can watch it. So I say to people as best as possible in the local context to absorb as much primary information as you can, meaning you directly to the source.
So even ATMs that you may not own the stocks in.
Yeah. So like if I wanted to know, so I'll give you an example. So like I knew microfinance was a mature industry before Proven sold their stake in Access.
Okay.
And so when I saw like, I really don't want me calling the business's name. When I saw like ISP etc. going to market, I was like, boy, it's cool, but these guys are a little late, because I felt like Access made all this money already. I think that has been proven correct, no? So now these guys are gonna have more competition, because think about it. So like, I'll give you another example. Like 7, 8 years ago, I remember I said publicly, or probably an email. So I don't remember when I said Scotia should try and buy Access. I think they really want to differentiate themselves in the space. I think they had Scotia Micro, some Scotia Finance or something that Lasco bought. I said, listen, they should try and buy Access, because that seemed to be that provision of opportunity or financing to that middle market space that ordinarily would probably take money from a loan shark, whatever, was underserved. And I felt as though whoever got into that space and formalized it quickly enough would make all the money. Access made all the money. So I mean, Mayber's investment went from like 40 million as a loan, and probably some of the cash separately, to like $1 billion when they sold. They sold at 9, and Proven bought at 9 and sold half at 20 something. So, in 5 years, I think. So the point though is that it's but my access to information, lack of no point intended, my pursuing information directly gave insight ahead of time. So I was able to set the clients who were running down that business at the time. I was like, probably want to be looking to sell, when it was 40 and wherever. But I was never a big buyer of it. But as I said, to come back to the question directly now, it's in this local context, you have to do the digging yourself.
Okay.
You have to do the digging yourself. It may mean you read the statin reports, Bureau standards reports. You may need to like speak to people who are in the know, the guys who you see at the AGM who can like disseminate the information or break it down properly. So David is good at that, David Rose, and there's others. If he'll talk to you, by the way, because but that's the way I think to do it.
So what about the trends? Are there any trends that we're to look out for, that the average retailer is to look out for?
Yeah.
So, okay.
Sorry, there's a sun flying in front of me. Yeah, so I think this bunch of earnings reports that are coming out in February will give good insight. And there should be a Christmas spending report out before the year is done. They give like preliminary data, and the other trend. I don't want to tell you what may happen because I really don't know. But look at like the Bank of Jamaica, remittances are back up. Look at the tourism inflow, the US dollars on tourism inflows, and then will the BOJ allow the banks, etc., to pay dividends again? Those are the things I think are most pertinent right now. All right, you're frozen. I don't think it's me. Is it me?
Yeah, Ryan, hi, you hear me?
Yeah, man.
Yeah, I think it was Lisa that dropped off just now, unfortunately.
No problem.
But yeah, that's definitely some very very heavy important information. I mean, we had some questions coming in there, but we're not there as yet. So like for me, I look at the reports. So like for sure, of course, the reports are thick. So the condensed reports are easier. So for instance, Epoch, following Epoch's report, they give very good condensed reports. So the starting ones, of course. So we're looking at, let's see, you said tourism, definitely coming off of Bank of Jamaica with the remittance inflows going back up. Any other? So what about the like the mining sector? Because the mining sector was important as well to us as one of the big key players.
Mhm.
So what other ones maybe? I mean, yes, we get a lot of our money from tourism. We also we're now getting our prop up from, if I would say it that way, from the remittances side. But what could be the real turnaround peg for 2021, especially given the fact that where our two biggest areas of inflows coming from overseas are in our UK and the United States, with the UK already doing their vaccination program now. The United States about to roll out their vaccination program in short order in terms of if they let Pfizer get through. Where would be the immediate injection or upshot next year? You think those areas that we should be looking for here that would basically flow over to here?
It's a good question. I'm actually not sure. And I'm not sure because, I think mining is going to, be constrained for some time. In fact, something that other people I don't hear acknowledged enough is 5 and 4 was derailed because of the closure of L.E.A.R.N, which was supposed to be a US $3 billion investment.
Yeah.
At the time, and then the removal of mining. I think actually had a great impact on GDP, the GDP at the time, or expected GDP growth. I think though I could foresee. I'm actually not sure. I think remittances, and I would love if an economist or whoever could tell me. So remittances is like 2.2, 2.3, 2.4 billion US directly a year. It said we keep 30 to 40% of the tourist dollar that comes to Jamaica, but then is that a direct injection or indirect? Those are the questions that I would ask. I think though, if we have this vaccine really find its way through the global economy and starting to reduce the incidence of spread, I think we will obviously, the natural guess to me is looking at attractions and tourism, because people are just so stressed out. They're just going to want to travel and relax and,
Right.
and chill out. So I could see that being a big thing. A lot of people, those who can afford it anyway, would have missed out on vacations this year and opportunity to unwind, etc. So that's my bet. I think we're still gonna have the same activity in the Netflixes and whatever. I just call it the remote activity sector of the economy. I think that's gonna be here to stay. You're gonna have more deliveries and just stuff that can facilitate business remotely. But I think Jamaica is somewhat hamstrung by the lack of a digital infrastructure. And I'm no expert, but where I can sit down in my house
Right.
and 2 clicks I order from Amazon. So I'm not yet able to do that locally. I
Yeah.
still
No,
I still have
sorry.
too much. I still have too much. I still spend too much time running errands.
But to inject that though, what is your view then on? There is a lot of discussion on Twitter. I've been noticing about these new companies that have pivoted to do the deliveries, say like your Seven Crave for food or your Peckish, etc. There is
Mhm.
a possibility that going into 2021, as we are pushing for a more digital economy in terms of that. I even saw a discussion about what people have been asking about is like, for instance, using the tax office to do, because they don't want to go into the line on Constant Spring tax office and waste 4 hours inside it standing up
Right.
there. I don't know if it's changed and it's improved, but when I was last there, just to try and get my license, pick that up, it was a long line, right?
Right.
So, and I saw somebody basically, so services like Jamaica J Triple A, I think it is the one that's done by JN, stuff
Mhm.
like that, where you have those handy services where they'll run your errands for you. You already
Mhm.
have that for the food section. Price Mart has their curbside pickup. You could have a delivery section. KFC, who we didn't think about doing deliveries, they're having deliveries done by Seven Crib. That possibly, even though it's not here now,
Mhm.
it is something that these businesses definitely are looking for, because even though we have a vaccine on the way, it takes time to get into the system. So at that point in time, still you're bleeding money every single time something happens and there's a new number of cases, or something has to shut down, or we go back into some kind of decrease in the time allowed for business to flourish. So we have to figure it out. So is that might be the new big thing in 2021. You might actually get the digital economy being forced in as the big thing for 2021.
Well, Lisa back yet, by the way, but no, let me tell you. I think what you'll be seeing in that space is probably Kingston 6, 8, 10, and 19 thing. I'm not sure. When I say infrastructure, I mean as easily as I can order from PriceMart or wherever you can deliver. I mean, people are saying they don't want to deliver to maybe some volatile areas, but then by that I mean somebody can order from wherever and pick up their product at a remote location, meaning the post office or wherever, right? And you can transact business with just your regular craft business, and it's not onerous to get to that, to execute that transaction. That's kind of where I don't think it's spread widely enough yet. So, and when you can do it seamlessly where there's no cash change in hands, then I think that's where it will be. Because what we're doing, we're still only serving maybe 300,000 people in this
Mm.
little space. And there's money being made, but it just means there's a much lower ceiling than if they were able to serve the whole island without it being a security risk. So that's kind of where I see there being this potential impediment to outsized growth. But I think that's going to require, that's why I said infrastructure, because you still don't have enough Jamaicans with credit cards or bank accounts, etc., to facilitate increased transactions. So they can make more money in our space. But then, is there more that could be done if you have a much wider pool? So I'm in Jamaica and I'm ordering from Amazon. I mean, that means Amazon's audience is, or customer base is global, right? Now, you may say, well, yeah, that's great, whatever. How many Jamaican businesses can we really say have a global consumption point? Yeah, okay, fine. Sandals does, but then that's why they're $1 billion business. But is there more? What else? What else could be done to replicate that in a way that translates to the specific industry? Is my question.
I'm thinking on the back of your statement just now. Still on the way of payments. And I'm looking at things like Digicel's MyCash, NCB's Quisk. You have other payments, and the ease of getting payment. I mean, if Western Union can do something as well too, because as you rightfully said, the you don't have a lot of uptake in persons using these payments. But with that, the question to you would be: do you see, or would you say that the financial entities have to be the drivers for this digital transformation in terms of the financial system, like that, the uptake by everybody?
Probably, but it could also be, and this is getting to political hot one, but a digital identity like a NIDS or whatever we determine is I think is appropriate, because that would mean there's some measure of uniformity. And don't get me wrong, I think this has forced us to take steps forward when you see, branches becoming like digital centers, whatever. So we have been, necessity is a mother invention. So we've been forced to take quantum leaps forward, which are great as far as demystifying the whole thing, but we still have some way to go, particularly when you start to go outside of the more urban areas. It's Jamaica is a very diverse place with a multitude of citizens who, how would I put it? This level of exposure, but then we still have, you can go some of the most remote places and have cell phone signal, which tells you it's possible. But I think there has to be, I believe, anything in terms of infrastructure or broadening of access, just like you have a road where everybody can use a road. I think like a digital highway has to be developed by the government. That's they have to lead that, which steps have been taken, even from when you had the liberalization of mobile licenses, whatever. But then now the next step to go forward means more citizens having a digital footprint.
Okay. Yeah. I think we just got Lisa back. Yep.
Hi. I've been backstage just listening to the two of you. I know Chike likes to ask the hard questions, and he likes, but thanks, Chike, for filling me in. My internet went down for a second, but it also gave me a chance to go and get a drink as well, because I know I felt it was unfair that Ryan was the only one drinking. But the Chike likes to ask the industry specific questions, which I personally wouldn't necessarily ask, because I feel like, especially in a market trend type of session, you want to take a look at the market as a whole. And in recent times, I've been watching more of the US market. And I guess mentally, I've been doing some kind of comparison. And like you were saying earlier, the tech companies and in the US industry. But what key areas would you suggest somebody look at? Local versus US. What key, because like even if you want to look at real estate, because persons are monitoring the real estate market, for example, to wait for the prices to drop. That doesn't seem to be happening, but that doesn't mean they should stop monitoring, because it can happen at any time depending on what happens in the future. What other areas would you suggest someone should pay attention to industry-wide?
Like asset class, right? Well, I mean, definitely. I mean, the Jamaica Stock Exchange generally has not rebounded from, and this is across the board, it has not rebounded from or to pre-COVID levels.
So it's still a bad market.
Yeah, definitely. The Dow has. So in the US market is above where it was pre-COVID.
Okay.
Jamaica is probably still down 20% from then, or 15 to 20%, whatever number it is. Because I think we're high at 500,000 or something like that, and it's like 400 and something now. So it seems like there's rampant opportunities in the space, or 423 now. So I'd still be looking at food. I think, but I think the person who breaks down the metrics or the comparative numbers may find opportunities. So I would literally look at the market multiples and then look at individual businesses. So I know for sure, I think Grace and Last M are below the 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 market multiple. No, could be wrong, but
Okay.
somebody can look at that. I think NCB may be close enough. I know Scotia reported about 9 billion profit today, which is down from last year, but a lot of their losses were due to non or credit provision losses, which is understandable in light
So
of.
you would say financials, because I know you said food, but the financial area, I mean,
You have to be a little nuanced with
kind
some numbers.
of.
I look at the reason I bring up NCD because they're heavily steeped in insurance. So I think that's the opportunity.
And NCB seems to be pivoting. Them have this thing coming out now where them offering. They have a lot of new initiatives coming out. It
Yeah.
seems that's been interesting. Persons.
That's a good business. And they started to pivot and they streamlined the insurance businesses beforehand. They had some HR moves beforehand also, and the consolidation, etc. All of that was excellent and really forward thinking. Now, look at other banks. So CIBC was sold, I think, to a Colombian firm. 60,
Yes, I heard.
right? They had Scotia with soft results, and there's questions now of where their focus is. But their response, they've invested billions in Jamaica in terms of reform, and I really like their ABMs and what they're doing. So I'm not as bothered. Sagicor seems to be in the heavily insurance space and the niche banking, whatever. So they've carved out their little thing, but who's going to lead it? When I look at NCB and the size of their insurance and the guardian position, I think they now have the cash to be able to buy if the opportunity comes up. So my take is to people generally, unless you're so in love with the sector, just buy the best business in the sector. I would say now to use the time to look at some of the more heavily discounted junior market businesses where possible. I'm always into manufacturing, particularly if it's non-food.
You and your lesson prefer a preference?
Yeah, but I mean, if it's non-food, I think there's opportunities. So I know that one. I like Fontana too. I think Fontana offers. I mean, I have not tried to go in one of the pharmacies this season, but I think Fontana has
Hey,
great.
Fontana delivers now, man. You don't
Well,
need to go in.
there you go. So I'm expecting they, I think, could do some buying if the opportunity presents itself. So I would actually say, and because the pharmacies are necessary in terms of medication, I think that will be a perennial source of opportunity because the first of its kind to list. And I like that. I like the pioneers.
So the thing is, men go into Fontana for a different reason, because me as a woman, I don't go into Fontana for no pharmacy. I go in there to shop and buy pretty things.
Yeah, well, that's not me. But the good thing is you have to go there. So instead of going Fontana and go York or wherever, you just go in Fontana and buy everything.
Yeah, that's true. That is true.
Makes perfect sense to me.
Okay. Tell me something that has happened this year during COVID that had surprised you.
I saw listed businesses fall in the Jamaica Stock Exchange to numbers I never thought I would see again. So I saw NCB fall to like
125.
90 something. That's a 52-week low.
Yeah.
52-week low, 125.
Yeah.
I was floored by that. Granted, again, as a trader, I sold all of it for clients at 200 and something, and bought back, and it's not a lot. And bought back at 130 the plunge. But the point is, haven't been buying at 30 and 40. The point is, we were. I just felt as though at the time there was a metric which I'm not inclined to share exactly, but they got the numbers that made me very uncomfortable. And I thought it was a good time to take profit until the other opportunity came up, which it has now with COVID. So I was surprised by the depth of the fall because a lot of these businesses were still doing well. And I never expected that. But what I came to realize, it was not large sellouts. And that's the important perspective. And that's something I say to people in terms of real estate, that the person with money who is well off will not need to sell their house, their primary residence, to pay a bill or to pay off a loan. That's the loan is a fraction of their overall net worth. The point, however, is that real estate is it's critical to it's a need because we are really talking about shelter. It's very like it's unlike that somebody's gonna abandon their shelter unless it's absolutely necessary. Now, if that person is not in need of the cash, they're not selling the main house. Then it's not like they're running like in the 70s because to some safe haven. Where they're going to go? Florida? COVID running away. They're not leaving. They're not leaving the house with the key in the door like they were in the 70s. So and the 90s to a lesser extent. So you're not going to have that fire sale environment. Sure, there may be the odd deal here or there, but maybe you and somebody do a behind the envelope thing and you change the asset changes hands. So the biggest surprise to me was seeing the stock prices fall like that because I knew the big guys were not selling. So I was very surprised that there would have still been that depression in the market, which leads me to really understand or to believe that the softness is in the middle. It's not at the top. So what may come out of this is increased inequality of income and wealth distribution.
Really?
Increased inequality, definitely.
Okay. Oh, I'm gonna wrap up my segment, and we're gonna head into the Q&A shortly. But Jermaine, who is in charge of our group, has been asking. He wants somebody to basically go over top picks for 2021. My question to you is: give me your 5 top picks going into 2021.
Locally?
Both. This should be interesting. Both. Give me 5 for locally and 5 internationally.
Locally, I've touched them already. I like
Asim. We know that one.
I like Grace Kennedy. I like Fontana. I like NCB. All right, there's a few. And
Okay.
I'll tell you a few that
So it's more than 5.
Yeah, but if you be a portfolio, I would let's say I would do 20% to those first 4, and then I like a few others. So if UA opens 1-3 at yourself for sure. If you have AMG packaging and
AMG.
it has been resilient throughout all of this. You have
I don't hear you call mail packets.
Oh, I'm not so sure. I think Mailpacks will be great. Oh, by the way, Mailpack, FedEx both had like amazing years. So those are twins. But I see everybody has Mailpack already, so I don't really want to go over that. But I'd have to see that this last numbers for after Christmas. But that it should be exciting. Christmas should be big for them. So when you said 2021, Christmas is still 2020. So you have oh gosh, just flew out my head. 138 AMG, Honey Bunny School reopens. You have, or when school reopens, you have. Oh my goodness. There's something else I can't remember, but that's a good start. That's a good starter. So I would split the 20 amongst those last few ones. There's some. I mean, oh, the lab will. But you'll see that next week or whenever they come out. So let's see. Globally, better question, harder question. Uh, because everything has gone up. Right now, I have been buying. Oh, absolutely love Pfizer. I think Pfizer, we've been buying Pfizer from it was 32. Very boring, very, vanilla stock. And I like businesses like that because their rise is fast and furious, but then it's just a lull. I just peaks one day and it stays up here. It just goes like that again, and if something happens really strong, it goes up. So Pfizer is the first vaccine out the gates that will be selling to literally a market of 6 billion people. One product, right? And probably every child that's born will have to be vaccinated against COVID-19. Now, remember, Pfizer is a Viagra business, whatever, so they have that fixed market already, right? No, this is funny, but it's actually just crossed my mind. If COVID really creates erectile dysfunction, it means Pfizer has two markets, right?
Oh my God.
So, really, right? So,
I read that. I
yeah,
read that a couple of days ago.
if anything about it, it only makes sense. But seriously though, Pfizer is established, very profitable, massive business. I like Dropbox for reasons I've said before. If I had to pick a tech one, which is essential, I would pick Facebook because even if they're forced to break up, they will be selling Instagram and WhatsApp at valuations extremely above what they pay for them, and that cash will come to them. So I think right, someone in the legal space can tell me, but they can't just take with them business. They have to sell it. The point though is they will have that money, but I would wait until after the outcome of this antitrust suit is known. Or if you're buying for like your kids, you could buy it from now and forget about it, ups or downs, whatever. But Facebook is definitely my social media business. I see a question here: best way to increase your credit score, service your debt, and get rid of unnecessary debt. So that's three, but there's two more. There's two tech pharmaceuticals. I had one here, Constellation Brands, which is with medical marijuana moving towards legalization. And they make, I mean, I hate to say it, but they make Corona beer in addition to other brands in their profile. And Constellation Brands very profitable. They own 38% of Canopy Growth, and the price has floundered a bit. I think that's an exciting opportunity for the investor now. And I mean, there's so many others. There's, Alibaba, Regeneron. But if I'm rounding out the portfolio, to be honest, I would wait to see what Apple looks like because I'd want that 40% tech exposure. So, and Apple has tremendous amount of cash. I'm just kind of wondering where will the price even out at and how well is this iPhone 12 doing? So I'll say Dropbox, Facebook, Pfizer. What's the other thing? I didn't write it down.
Apple and
Constellation Brands and Apple. I'll start with that. There's Nike too, but Nike's a little expensive right now. They report numbers December 18th. So let's see what that looks like too. But all being equal, I look at Nike, but let's see what numbers come out like and then what the multiples look like at that point. But I'm pretty sure as we move towards vaccinated environment and more people being equal, 95% immune to COVID, we should start to see the resumption of outdoor activities in earnest. But granted, Nike is already selling digitally, so blah, 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 blah.
So I think we're going to open up to some questions. But Ryan, thank you so much. I saw one of the comments that somebody said, oh my goodness, Ryan, top picks, how exciting. You're gonna see some people go out and go, okay, Rand said. Rand says these are good. People don't go and buy anything unless you do your own research. Rand is not your advisor. You can speak to your advisor.
Please.
Make sure you talk to your people and get more details before you go out and buy anything. Don't just buy anything because somebody says so. Even if it is Ryan Strong.
There you go.
All right, so there's a question that says, is there new strong money coming to market next year? Also, I think the JSE needs to remove the upward halt rule.
Circuit breaker. Yeah, I can see there may be reason to remove circuit breaker. Is there a new money? I mean, yeah, I mean there's money in the space locally, and there's opportunities, and there's a capital market, and
I mean, there were anticipated 23 IPOs that were supposed to come out in 2020. Miss Street Forrester had come on a platform and indicated that she had a significant number of IPOs in the pipeline, including things like Fesco, Alliance, and JPS, and of course, all of those were. I saw a subsequent clip that said, well, because of COVID, a lot of persons did not come to market. Depending on the outlook of 2021, maybe those will come. There are also a lot of APOs in the whisper that I've read about, I've heard about. So
I think the market, I think people have cash now and are looking for opportunities. Sorry, you just did something that reminded me I need to call back somebody tomorrow. Thank you. I'd have completely forgotten. I should have called him back today. Yeah, I think there's deals out there to be done. I think there are a lot of good businesses that people want to list and they want to do things with, whether it means owners or founders retiring or merging with others or a multitude of things. So I think we can reasonably, and there's public appeal. Now, to what extent that translates to big money or new money remains to be seen. But I think the ground is fertile for activity. That's how I put it.
Okay, that's a local market.
Yeah.
Okay. All right. So, and now for the international market, what are your thoughts on the Airbnb IPO?
Sorry, I wouldn't buy it. Sorry.
Why you wouldn't buy it? We have against people them IPO.
I think there's weakness in the travel space, and I think the lodging space has challenges, and I think the upsize kind of around my spaces. I feel as though market may better be bored and you need something to stimulate it. But remember, US market, the dynamics are quite different though. It's tremendously, it's driven by a lot of other forces. You have option traders, you have short sellers who fall in that bracket, etc. You have guys betting against the market. So all these factors can result in capital flowing in and out of the markets very quickly. And then also, because you have a much more robust venture capital and private equity market and angel space, you may have people who bought into Airbnb when the enterprise value was $1 million. Now they're coming to market at, I don't know if it's 30 billion or whatever. So you have people who, no matter what price, when they sell, they're making a life-changing sum of capital off the bat. That's not necessarily the case yet in Jamaica, because you have a man hustle and shuffle and build up in business with him and or probably one family member own the land, one family member own 2 bus, one own 2 vehicle, and then when they come to you, the broker, or you land the business, you have to help reform everything and bring it into order, which explains why sometimes IPOs take so long to come to market after the announcement. Certainly they did, because that formalization in the market is not there yet, right? So those factors will many times drive the US market. And then the US has 100 times the number of people Jamaica has. So you multiply that kind of formalization times the number of people, and you have a critical mass. So then You have a market that's absolutely bananas to the point where people don't meet with humans to discuss business unless they're millionaires. So I mean, IPO is all right, but I'm not. I'm not. They make money. They make money. They make money now. They had two rough quarters. I think last December was bad before COVID. But I think my read of it, so many hotels have suffered, right? So many lodging entities have suffered. You're going to start to have that contagion in the middle. You're going to have a lot of people fighting, a lot of businesses fighting for the consumer's dollar in the middle. And as a result of that, you may find there being some compression on businesses like Airbnb or the Hilton or whomever. So that's kind of where I see things shaping up. So for me, it's not enough of a compelling case to like it.
Okay, cool. I can respect that. I can see that. What's your thoughts on Tesla? That's one of the questions. Do you think Tesla is a stock to hold for the long term? Oh, I so like this question. Thank you, Joseph Brown. I like this question.
I haven't looked at it closely, so I can't offer a comment.
Really, on Tesla, the ever present, ever popular, ever crazy CEO on Tesla?
And there's a pro Elon group and a group that's not for him. So I think there's a lot of emotion around Tesla. And when it comes to emotions and
I
investing,
think there's a lot of emotions around Elon Musk.
when it comes to investing, I stay where when there's emotions, I go to the other side of the room because it starts to impair my judgment. And so because of that, I just offer no. I don't give any time to test. Further, I didn't understand the business in the sense of how they make money. If they make money, is it real money? So I just leave it alone.
Okay.
Yeah. I
So,
saw a question about thoughts on DTL and CFF.
yeah.
I think, and I haven't, again, I don't watch either closely. I think CFF was attractive. I actually wanted to get someone in order to level something. And it's that's a funny story because I saw it just came across my radar the Friday at like 11:45. And
PM.
CFF. And I said,
PM. 11:45 PM. As
yeah,
in,
no man, the market was open.
okay.
I said, I want to. I sent to my broker, buy some. Never got it. It was a margin trade and whatever. I wasn't really that compelled by it. By the end of trading day, I get the advisory about the rights issue or the stock split or whatever it was. Because they reported good numbers despite COVID. So I said, channel star. So then it flew up to 19, like within a week or whatever. So I have to say, good business. I think they make components in products which are attractive. I don't mind it. I think BTL, I don't look at it very closely, but if I remember correctly, I know they had cash flow issues at one time, or working cash issues, or the ratios were a little soft. So I didn't really, I wasn't enamored with it. Yeah, I'll put it that way. I wasn't enamored with it. I thought it's not that it's a bad business, either the two. I just thought there were better opportunities out there. So I kind of focused on that. So probably if I'd filled my basket with what I thought were the best opportunities, then I'd give it a look. I think, oh, by the way, I think a good business actually, what I'm expecting a lot from is Berger Paints. And I'm keen on seeing what Carib Cement looks like. I forgot those two. I think if those two have good Christmases and that manifests itself in the numbers, you will see some movement there. I sold my Berger at 20 because I just decided to buy elsewhere, but I have my eye on them as far as opportunities go.
Okay, so we're adding that to the list of local stocks you're watching.
Yeah, in the 20%.
A decent list still.
Yeah.
So, all right, so we have Troyan asking, why the US companies IPO so expensive when most of them not profitable? How do you value a loss-making company? Oof.
I mean, I think it depends on the business, meaning or the industry. So, like medical marijuana, for instance, is not widely consumed to the point where you can start to see profit. Meaning, they have to spend so much in terms of financing costs to build out before they start to generate revenue. I remember there's a 6 month lag for growing. So effectively, 2 quarters a year, you're generating no revenue until you've built up. So you're talking a 3 year runway to probably even get into positive cash flow, right, at the earliest. But I said that to say, past that, my investment parameters does not allow me to buy into a loss-making business. So I bought Facebook at IPO for clients, or close enough to IPO, because Facebook was profitable from its listing. So I don't even. So if you're going to buy a loss-making business, you can look at the assets and try and apply a multiple. Depending on the industry, if the whole industry is losing money, then you may be willing to go for the ride to profitability. But if it's one business in an industry of whatever number, and only that one business is losing money, chances are there may be a problem. But if you're going to value a loss-making company, you have to look at the balance sheet. But I'm not the person to talk about that because I don't buy businesses that lose money. That's a part of what I'm doing.
Okay, fair enough. This is an interesting question, and of course, it's coming from Chike. What are the ratios you really pay attention to?
It depends on the industry. I mean, for manufacturing, for argument's sake, you look at, and depends manufacturing of what. You will look at things like revenue to assets, for argument's sake. You look at the more efficiency-driven ratios because it's a relatively stable industry. But if it's a service business, for argument's sake, you'll be more looking at revenue growth, for argument's sake. Or you just look at, I look at revenue growth, in fact, because you're not going to have a heavy asset base if it's services. So it comes down to the industry. I try to tell people that you're going to get some problems if you try to view investing through this narrow lens because it's so relative. And you can't really compare, and then it's hard to compare without leveling the field. Somebody may look on two businesses, right? And try to infer from their like price to earnings ratio. But one business built its business on debt, one built on equity. Now the problem with that is one equity may have an amazing PE ratio, but the debt one doesn't, but only because the debt one has financing cost, which lowers its profit, right? Which could cause somebody to miss an opportunity because suppose they get equity and in equity injection and wipe out the debt. So you have to level the playing field, which is why sometimes people come now and they say, okay, let's look at EBITDA, for argument's sake. Because they'll say, okay, that gives us a reasonable frame. But there's so much stuff that can happen. There's so many factors that one has to consider. And you have to go through it like a fine-tooth comb and make sure you're not missing anything. So I'm very careful before I pronounce it in the business because I need to understand the levers that are driving that industry altogether. Right? Because another thing now maybe, okay, let's say we look at gross profit margin, right, of a manufacturing company. Now that will benefit from low oil prices or low commodity prices in general. But then somebody may be like, yes, now is the time to buy it, finally. And then COVID ends in a year, right? And they lock their eyes and forget about the stock. And all of a sudden, you see commodity prices in the emerging market start to inch up. And then this business gross margin starts to erode because the inputs are now more expensive. You follow what I'm saying? So it's necessary to understand the cycle of the business and what the drivers are because ratios only tell you so much.
Okay.
But the standard ones like debt to equity, stuff like that. That speaks to the financial health. I look at liquidity ratios. So I like businesses with high cash balances where possible, because that says that has opportunities to acquire new businesses. And I love acquisitions. And I look at less concern. I mean, yes, they may have the extent to which they generate revenue from their fixed assets, but it's not everything for me.
Okay. Well, it's getting close to wrap up time, so we're only going to take a few more questions. Right now, we have Mona Lisa asking if you have any recommendations for persons who want to take on short-term trading strategies. I don't know if she means short-term in the 1 year or if it's short-term in the sense of day trading. I know you're not big on day trading, so.
I'm looking against it. I'm just not the expert. Mona, there's much better people out there to speak to than myself about that. I'm a very risk averse, buy and hold great businesses for as long as I can. And I'll trade if I think they've topped out because I'm exclusively about growth. But there's better guys out there to talk to about that. Trust me, I'm not.
Okay. Value investing is key for you. Of course, cheeky.
Growth. I look at growth. I look at upside within the context of steady performance, and I'm very patient. I can wait forever if I need to. As long as it's a good company, I'm fine.
Making money.
Yeah. I can shut off my camera for a second, but it won't be long.
Okay. One more question that says, can a portfolio be too diversified? What is the ideal number of stocks in a portfolio? This is not the first time I've heard this question.
I mean, it depends. I have. It depends, man. Let me tell you, it comes down to the person. I typically, unless you're talking a ton of money, I typically don't buy more than 8 stocks for any portfolio. But it depends. I mean, there's portfolios for institutions that have that like 15, 16.
8 stocks per local portfolio or?
You're overseas. Locally, you just heard me mention 5, but then it depends. So.
No. Locally, you mentioned about 12. So.
I would buy, like I said, I would base it on the 80% and I'd be adventurous with the 20, but that's me. So
okay.
I don't diversify heavily. I just try to buy into the industries and the businesses that I think will present the most upside. Because that's my ambition. I'm not investing to pay down in a house or to buy a house or whatever. I'm investing for to become a billionaire.
How is that your aim, to become a billionaire? All right, cool. We have one final question for the evening. How do you identify industry drivers? And that's from Christoph L.E.
Well, I mean, consumption pattern, right? So, I mean, if a restaurant is people in the restaurant, right? Or if it's
manufacturing companies what they need.
It's a consumption. Yes, consumption. Okay. I think consumption ultimately is it. I mean, of course, it's as I think people think about the business from top down. So they have to have goods come in or inputs come in. If they're manufacturing, it goes into a factory and it goes out. So then it's going to be, how does it get there? It's a long answer, but long story short, it's consumption and expense base.
Okay, consumption and expense base.
Yeah.
Cool. All right. Well, thank you, L.E.A.R.N. We've taken up a significant amount of your time. I know you've had a long day, long week before you rest up. Thank you so very, very much. We've all learned something. We've all, you've said you've dropped some golden nuggets that we can all think on tonight and for the rest of the year and what we're looking out for 2021. One of the reasons why I asked you about the 2021 picks is that whomever it is that Jermaine decides to get for that 2021 pick session, I wanted to do some comparison shopping, so I'll be happy to hear what the hows and the whys during that session. But thank you so much. I am grateful. Everybody else is so grateful for everybody who is with us. I hear we have about 50 persons online. We will be posting this video. Everybody who has stayed with us this entire time, thank you so much for joining. Please like, share, and subscribe. Of course, we are a club. We are on Facebook. You can join the Facebook group. If you want to, feel free to drop us a line. Jermaine has shared his email. We are very big fans of Ryan. And hopefully we can at least convince him one more time for 2021 to come and give us a talk and share us, some insights. He definitely has expanded all of our minds. It's always a pleasure, Ryan. Thank you so very much.
Thank you, guys. Thank you. Talk soon.
So people say big fan, big fans.
Thank
so
you.
Everyone have a great evening, and we'll see you again.
All right, take care. Carol, big up is cool later.
Bye.